Every investor is going to make mistakes in their investing career, but the key is to be able to recognize these mistakes and mitigate the impact that these have. So today I'm going to share with you 3 of the biggest mistakes that all investors make during their careers. How's it going, guys? Ryan here, and today we're talking about 3 big mistakes that all investors will make at some stage during their investing career. And the most important element of this is recognizing these mistakes when you are making them so that you can mitigate the impact that they have on your portfolio. But before we get into that, I'd just like to have another shout out to my guys on Twitter. They have helped me out so much, and I'm now almost at 140 subscribers, which for myself is huge. Yesterday we managed to get out into the hundreds, which was wicked, first time ever, and we've already shot up to 139 subs. That is awesome. Thank you so much, guys. I really appreciate the support. And please remember to like these videos because it does help me out a lot. And if you aren't subscribed but you enjoy the content and want to see more investing videos, more stock market tips and tricks, remember to click that subscribe button. It helps me out so much. And if you've got any feedback, any comments, questions or queries, leave them down in the comment section below. This is the community we're trying to build here. We're trying to build a community of investors and like-minded people so that everyone can get involved, everyone can grow and learn from each other. This is incredibly important when it comes to investing. Education is absolutely key, but more importantly, collaborating and learning from other investors and the mistakes they've made, the good decisions they've made, and people where you want to be in the future. Interacting with those sort of individuals is absolutely important when you are just starting out. Now, without further ado, let's get straight into the video. Now, when we're talking about the 3 biggest mistakes that investors make on the stock market, I like to categorize them into the 3 I's. Now, what are the 3 I's, you might ask? Well, firstly, you've got impatience, you've got ignorance, and you've got impulse. These are the 3 biggest things that you will encounter, and they're all psychological. You got to remember the stock market is a very psychological beast, and the decisions that you make are driven often by your mental state and what's affecting you, and your experience is what's going to dictate how good you are at decision making. But more importantly, educating yourself to understand when you are making these mistakes. So let's get into the first I, and that is impatience. And being patient in the stock market, in particular when you're talking long-term investments that can generate you value over time, it is very important to be patient and to keep your cool. The worst thing you can do is go into a long-term investment and then end up jumping out because you just can't wait for the share price to keep going up, or you see it fluctuating in value. So as a result, you're getting impatient and you can see other opportunities out there that you're potentially missing out on. That isn't the point. If you're investing in a stock long-term, the whole point of it is to hold that stock. You have identified a stock which you can see growing in the future. Make sure you set those targets in your head from a time perspective. So for instance, if the company has a timeline of where they want to be in a year, 2 years, 3 years time, even on a monthly basis, this is what you want to really look at, really break down and understand. Okay, the company is valued at this now. Where should it be valued when X activity occurs, or in X amount of time? Because what you're looking at is the value here versus the value here. You don't care what happens in between. Ideally, obviously, you should be aiming for a stock which is currently sitting here but is going to end up extremely high. So you need to be patient for these things to occur, and often they are not going to happen overnight. Of course, you see those rare stocks which go absolutely crazy, a few 100% in 24 hours. Absolutely insane. But those ones are hard to pick. If you get on them, awesome. But more often than not, you're not going to. And the people who make real money off the stock market are those people who can identify value at the early stages and are patient enough to hold onto those stocks throughout all the fluctuations that are going to occur and throughout all the pain. Your emotions are going to get the better of you. And this moves into the second I, and that is to do with impulse, controlling your emotions when you are holding these stocks. Often you will see you're holding a stock, and if it is something like a small cap or a micro cap, penny stocks, those sort of things, relatively young companies, they are going to fluctuate in value significantly. If you've identified a stock is going to be valued at $1 in the future and you buy in at 10 cents, but the stock drops to 5 cents, that does not necessarily mean that you should sell. Has the fundamental reason for you investing in that stock changed? If it hasn't, then you need to be patient. You need to just sit on that stock and not act out on impulse. And that is an incredibly important thing that you need to control and identify when you are acting on impulse. Before I make any decision when I'm investing, I take the time to step back and analyze what the current situation is. I look, yes, this is the share price of the stock, but have the fundamentals once again changed? And if they haven't, then I go, cool, then there's no reason I need to sell my investment if I don't need the cash or whatever the reason may be. I'm in it for the long term and I've got a specific goal in mind, and only if anything affects that goal directly and is linked to the company or the economy, something bad happens that is actually tangible and you can see it, that's when you need to generally assess what you're doing and if you need to sell the stock or not, as opposed to the typical daily, weekly price fluctuations that are going to occur over time. Go and look at any stock chart, and if you saw that a stock is currently sitting at $5, where were they 5 years ago? Were they at $1? Were they at less than $1? How many fluctuations occurred in between this time period? And more often than not, what you're going to see is it goes up, but it goes up and down. So you want to be following that uptrend all the way along, but you just need to be patient and not act on impulse. Now, the third point that I make, which is the third I, is ignorance. And for me, this is so important, particularly when it comes to new investors. Listening to tips from friends and just buying stocks for absolutely no reason. You have no understanding. You haven't done your own research and you're effectively ignorant to the value of the stock now, ignorant to the potential of the stock, ignorant to just the company you're investing in general is a terrible idea. And often this is how a lot of new investors get caught out. People who've never invested before, they get a tip from a friend, they get a tip from Twitter, they get a tip from Hot Copper, those sorts of things, but they don't actually know the value of the company. This is how pump and dumps occur. And a pump and dump, for those who don't know, is effectively where you've got individuals who are spruiking a stock, don't back it up with any legitimate facts, and they're pumping the share price up. They're trying to get as many people to buy that stock to inflate the value of it to more than it's worth, and then they sell their shares into it and the stock price absolutely plummets. This is not a situation you want to be caught out in. So if you find yourself wanting to buy a stock, but you actually step back and think, hold on a second, I don't know much about this stock at all, then what you need to do is not be ignorant. Do your own research. Even if you do get a stock tip and it sounds pretty good, still do your own research. Educate yourself. Look at the peers in the market. Look at other companies and their competitors. Look at the cash flow statement. Look at the current bank balance. Look at what the company is doing now. Look at their future point and look how they plan to get there. Is it feasible with what they got? And does this company stand out amongst the rest? Because that is where you want to be investing. The companies which really stand out and which can really add value to people's lives or to the world in some way, shape or form. These are the companies you want to invest in. Now, if you combine these three I's and realize that you're making any of these ignorance, impulse or impatient type decisions, then you're not going to make as many mistakes. Of course, you're still going to make mistakes. Any investor, particularly new investors, are going to make mistakes, but it comes back to recognizing the fact that you are making these mistakes in the first place and being able to step back, take an outside perspective and understand, hey, I'm acting on emotion. Hey, I'm being impatient. Hey, I don't actually know enough about this company to invest in them. That is a terrible idea. Step back, understand what you're doing, and then make a decision. Don't just act out on impulse, ignorance, or impatience. And that is my 3 big mistakes that all investors will make at some point during their career. Let me know down in the comments section below, what are some of the big mistakes that you have made? I'll share one with you guys from me, and I've spoken about this in previous videos. I lost $100,000 on a stock purely because I got wrapped up in it. I fell in love with the stock, but I was ignorant. I did not focus on the fundamentals. I did not focus on the cash position of this company. This company kept taking on debt to pay debt and taking on more debt and doing capital raising and all these sorts of activities that diluted the share price significantly. But I was so in love with the company that I was unable to recognize that there was an issue. And it was only until I stepped back, and unfortunately for me, it was a bit too late, that I realized, hey, I need to jump out of this now. And if you guys did enjoy the video, please leave a like. It helps me out so much. And for more content, please remember to subscribe. I'll be posting at least twice a week these sorts of videos. And with that, guys, I hope you have an awesome day, and I'll see you next time. Cheers.